Hi again. Yesterday we had a look at the diamonds and a brief mention of pressure points. Now today I want to explain these a little more, but just on a side note here, I'm working on a video and printable document for every aspect of the indicator settings, and I hope to have this completed in the next few days, and then this will be available in your training portal. Okay, so back to diamonds and pressure points. Let's look at the pressure points first. Now, pressure points are best explained as an indication of when buying or selling pressure is detected. This buying or selling can be initiated by the market makers or the outside market who are reacting to, for example, say expected news. Now, the location of these pressure points is important because they intensify in strength as they get closer to the outer edge of the floating zone. This is why we have the reject value setting in pat. Now this acts as a filter for us. Now here you see I have the setting on this 30-minute chart at 16. Let's adjust this and see what happens. Okay, so you can see that this has the effect of filtering out the weaker pressure points, so we are left with the higher strength ones. Now a point worth noting here, the pressure points and how they are rejected is also linked to the diamond shapes, which are breach markers. Because of this, when you adjust the pressure point reject value, you are also impacting the breach value of the diamonds. Remember, the diamonds are the breach markers. Now this impact of the reject value on the diamond is intentional and the way that pat indicator works. So think about this logically regarding pressure points. The pressure point is moving up. It gets further away from the equilibrium of the floating zone, which is the midline. You could call this midline the mean price. Now, if you want a more in-depth understanding of the mean price, visit Mr. or Mrs. Google and type in regression to the mean. But in a sentence, basically, the law of regression to the mean is the tendency for extreme measurements or outcomes, in our case price, to return to a more average price. Now maybe you're ahead of me now with the pressure points and why they become more valuable as they appear further away from the center line of the floating zone. So now let's bring in the breach markers, or diamonds as we call them. I have these coloured orange to show them clearly on a black background, but colour choice is up to you. The name breaches gives you a hint of what is going on, but breaches of what and why are important to understand. To better understand them, let's briefly return to the pressure points. Okay, so we know from the earlier explanation that the pressure points are best explained as an indication of when buying or selling pressure is detected. This buying or selling can be initiated by the market makers or the outside market that are reacting to, say, news. Now, forgive me for a bit of science quoting. Newton's third law of motion, but it's important to understand, or in our understanding, what we are doing here with regard to pressure points. Newton's third law of motion says that for every action there is an equal and opposite reaction. This is how forces interact between objects in the physical world. Okay, now you might think that this is not relevant to the markets as price is not a physical object. But I would argue that you would be wrong, and this would cause a disagreement between us. If you disagree with me, you will have an opposing belief to mine, and now we have a back and forth dialogue trying to get our respective belief to win the day. Now, if you've completed the Market Makers Method training course, you will already understand how beliefs in higher or lower prices will directly affect higher or lower prices. Maybe now you're beginning to see how this goes full circle. Now, likely you remember the lesson in the course on form versus content. Now, in more than 2 decades of trading financial markets, I have never deviated from what you find in the Market Makers Method training course. Yes, we have an improved tool to show us more, but the underlying trading of beliefs has not and will not ever change, because the birth and death of collective beliefs about whether a price will move higher or lower dictates whether that price moves higher or lower. Now, if you're not familiar with this concept, then go and sit through the trader training course, which is the Market Makers Business Model Exposed. Now it might seem that I detracted from where this video started regarding pressure points because I introduced Newton's third law of motion, but I didn't. And Newton was intentional because I wanted this concept of action and reaction in your mind. I wanted you to understand the why of the pressure points and what is behind them, i.e. not the chart pattern, but the content that is behind the pattern. And when a pressure point appears, you now know what is behind it. You know why it appeared. The pressure will either turn the market in the direction of the point because there are insufficient opposing beliefs, or opposing beliefs will challenge those beliefs that the pressure point is revealing. To every action, there is always opposed and equal reaction. If the price now moves above the pressure point, the pressure to the downside will collapse and the market price will likely rise. By the way, this is why we can use such small stop losses on our trades and why we have excellent risk reward. Now onto breaches, shown by a diamond shape. These are an indication that Newton's third law of motion has come into play again, because the breach of a pressure point has occurred. This is a big deal in the battle of beliefs regarding higher or lower prices. And note how far the diamond is from the centre line of the floating zone and regression to the mean. So from here at the breach, either one of two things are going to happen. The price is going to collapse back towards the mean price, centre of the floating zone, or it will breach and move higher before finding a new equilibrium before the whole process starts over again. I'm excited to tell you that in the next video we're going to cover the actual placing of orders using when, where and how. That video will be arriving very soon, so make sure you get a notification. Have a wonderful day and I'll catch up with you soon. Take care.